So, what if you could see a stock's next big move before it actually happens? Today, we're going to pull back the curtain on a really powerful tool that helps traders do just that. It's called On Balance Volume, or OBV for short, and trust me, it's all about tracking the hidden forces that are really driving the market.
You know, most of us, we just look at a stock's price. Is it going up? Is it going down? But here's the thing. The price alone doesn't give you the full picture. The real secret, the clue to where a stock is actually going, is often hiding in plain sight in its trading volume.
Exactly. Think of volume like the fuel in the engine of a car. The price is the car itself, but the volume, that's the gas that makes it go. If you can see that fuel tank filling up, you've got a pretty good idea that the car is about to go somewhere, even if it's just sitting still for now. Okay, so the secret really comes down to knowing who is doing the buying and selling. And the key here is to learn how to follow what they call the smart money. We're talking about the big institutional investors, the ones with enough cash to actually move the markets.
The whole idea is based on this. The market really has two kinds of players. You've got the giants, the whales. These are the huge institutions like mutual funds, pension funds. And then you've got the rest of us, right? The smaller individual retail investors. And the crucial part is these two groups behave very, very differently.
And this is where it gets really interesting. When one of these big institutions wants to buy up a stock, they can't just go and buy 1 million shares at once. That would make the price absolutely skyrocket. So what do? They do it quietly. They accumulate shares over time, and this causes the trading volume to creep up, even while the price itself looks kind of flat and boring. It's this super subtle clue that something big is brewing right under the surface. So, how in the world do we actually spot this hidden flow of money? Well, luckily for us, there's a tool designed for this exact purpose: On Balance Volume. To put it simply, On Balance Volume is basically a running total of a stock's trading volume. Its whole goal is to use that flow of volume to get ahead of the price and give you a hint about where it might be headed next. And this isn't some newfangled indicator either. It was developed way back in 1963 by a market analyst named Joseph Granville. His entire philosophy was built on this one core idea: volume comes before price. He believed that when you see volume starting to build up without a big price change, it's like a spring being coiled tighter and tighter. And eventually, that spring has to snap. And maybe the best part about all of this, for a tool that can be so powerful, the math behind it is surprisingly simple. Seriously, let's break it down right now. There are literally only 3 rules to remember. Rule 1, if a stock closes higher than it did the day before, you add all of that day's volume to a running total. Rule 2, if it closes lower, you subtract all of that day's volume. And rule 3, if the price doesn't change at all, you just leave the total alone. That's it. It's just a simple way to see if money is flowing in or out. Now, this is absolutely crucial to understand. The actual number you get for the OBV total, it's completely meaningless. It doesn't matter at all because it just depends on when you started counting. What traders really care about, the only thing that matters, is the direction of the line. Is it trending up? Is it trending down? Or is it going sideways? That's the whole game. Okay, the theory is great, but let's make this real. Let's see how this OBV calculation actually builds up over, say, 10 days of trade. So as you can see, the logic is really clear. On the up days, like day 2 and day 3, we're just adding that day's volume to our running total. But on the down days, like day 4, we subtract it. And check out day 8. The price closed flat, so the OBV total doesn't change. What you end up with is this single, simple line that shows you the cumulative pressure from all that buying and selling over time. So this brings us to this single most powerful signal that OBV can give you. It's called divergence. This is what happens when the price and the OBV line are telling you 2 completely different stories. So picture this. A stock's price is just kind of drifting sideways, maybe even dipping a little. But underneath all that, the OBV line is steadily climbing higher. That right there, that's your signal. It suggests the smart money is quietly buying in, and it can be a huge heads up that the price might be getting ready to take off. Now, of course, there are other volume indicators out there. Some of them have way more complex formulas, but the real genius of OBV is its simplicity. It doesn't care about the high or the low of the day. It asks one simple question: did the stock finish up or down? And that makes it a really pure, direct measure of buying and selling pressure. But, and this is a big but, like any tool you'll ever use in the market, OBV is not a magic wand. It is not foolproof. And it's really, really important to understand its limitations before you start relying on it.
Okay, first off, because OBV is what we call a leading indicator, meaning it's trying to predict the future, it's going to give you false signals sometimes. It just will. Also, a single massive volume day, like after a surprise earnings report or some big news, can throw the reading off for a long, long time. And that is exactly why it should never, ever be used all by itself. Think of OBV as a brilliant detective who's great at finding clues, but you always want to get confirmation from other indicators before you make your move. So, what's the final verdict here? Is on-balance volume a crystal ball? Nah, not quite, but it is an incredibly valuable piece of the puzzle. It's a simple, elegant tool that helps you look past the day-to-day noise of the price and listen to the real story that the volume is trying to tell you.